how to get good at trading. If you clicked on this video, you're most likely already a trader with a trading strategy, whether it is smart money concepts, supply and demand trading, price action trading, indicator-based trading, or algorithmic-based trading. You would agree with me that across all strategies, the fail rate in trading stays relatively the same. So can we conclude that the problem is from the way people analyze the market to take trades? If you're a beginner trader and are tired of learning from 100 mentors without any results to show for it, today I will not be selling any courses to you, but I will be giving you the most sincere way in which you can apply to get funded and start making the Forex money. Not financial advice, so please do your research before making any financial decision based on this video. That being said, let's kick it off. Now, since I have nothing to sell to you, I'll come clean and I'll be transparent 100% in this video, giving it my best shot in explaining. Now I've learned all Forex strategies, or at least the majority that most traders apply in their day-to-day trading. I've been in on the trading game for about 5 years. Before I give you the blueprint that works, I'll be telling you the things that do not work, so you don't waste your time and probably save money which would have been wasted in taking care of your family or getting something for yourself, and also keeping your mental health safe. The first thing that does not work is YouTube mentors. Now, I'm not saying that all YouTube tutors are bad. In short, YouTube is a good place to start if you have zero knowledge of trading. A simple search on how to get started on trading as a beginner will have you in oceans of information beyond your expectation. Critical thinking will make one ask, if there is so much information about trading on the internet, then why are the stats and performance of traders not improving? Now let's dissect it and look at it critically. A majority of information about trading on the internet is mostly false and unverified or immeasurable, meaning that even though a person is showing you profits from their trades, their approach to the markets when followed with zero divergence will lead to an endless loss in one's account. Don't believe me? Take a look at your best Forex mentors, then go ahead and write down step by step their criteria for entering a trade. Most times when you backtest or even forward test their thesis, you will find out that the strategies maybe only work in very specific conditions and the rest of the times end badly. Now, that being said, we now know that most information given out on trading strategies in itself is bad and useless. Now that is out of the way, even if the strategies work, the chances that the strategy will fit perfectly with your personality and preferences are very minute. Most traders fail for years and their primary instinct is that they have bad psychology. Now, the truth is that the markets are ever going through different cycles, but repeat historically, but most traders that fail don't even have an edge over the markets. Imagine learning how to become a doctor on your own without going to med school. I believe you can already see the disaster before I even complete the statement. And the odds of becoming a doctor when you go to med school are higher than the odds of becoming a profitable trader. So even if your psychology and risk management are on point and your strategy does not work, you will consistently be a losing trader till infinity. This means the approach has to change. Firstly, you need to find a thesis or a strategy that you believe in. Next, just like a scientist, you need to prove to yourself that your thesis is correct. How would you do that? You may ask. By testing your Forex strategy around all the different market cycles, knowing when your strategy performs best, and then making adjustments and modifications till you get the Holy Grail. Regardless, I don't believe that trading psychology is the only reason why most traders continuously lose over donkey years. Before we even go into the most realistic steps to take to get better at trading, we need to know the different approaches traders tend to take. Now, there are only 2 types of trading in my opinion. The first one is simply by discretion, meaning that a trader places a trade just using their intuition and experience and guessing that the trade will go in their favor. This is the worst way you can ever approach the markets because your results are hardly ever replicable. No clear strategy, and no clear way to test this strategy over a long period or prove profitability. The second way to trade is an algorithmic-based way of trading. This is what this channel preaches and tries to impact on a trader. Algorithmic-based trading is a step-by-step based trading system. You know when to execute every trade. You know whether a setup is worth it or not, and this is how you execute. This type of trading can easily be tested over a long period to see if it will be profitable or not, and gives a trader stronger confidence compared to the other way of trading that simply depends on the gut of the trader and how the trader is feeling about the markets. If you were given the chance to pick a style of trading, which would suit you? Leave it in the comment sections. Now, how do we get better at trading? The first step is to make your trading strategy algorithmic in all forms and at all levels. Starting from your entries to the time you're to break even, the time to take partials on a given trade, and also the time to close the trade, and so on. This needs to be defined light years before you even think to start trading any markets. Now, how would you be able to define your algorithmic-based trading system? The fastest and easiest way is to use non-repainting indicators to compile a simple system. But we all know how hard it is already to make any profitable system with just random indicators. That is where the hard work comes in. You need to learn the professional way to add indicators, the types of indicators you'll be using, and how. The indicators can work together. One YouTube channel that goes very in-depth, and this is the No Nonsense Forex YouTube channel. I have learned a tone from this guy, and I believe you will too. So once you've put together an indicator-based trading strategy, the next step is to make sure the strategy works as expected. Now, this is the hardest of all the steps, as it can take years and years to find a profitable strategy. Now, this step involves correctly backtesting. That means going back in the time, years and years ago, to test the particular criteria which you use for entering the markets and checking to see if your strategy can stand the test of time. As we all know, the market cycles repeat, and the market has never changed in its delivery. That is why if a strategy has worked perfectly for the past 5 years, we can have more confidence. And the chance of it also working to create profits this year will be higher than a system which has not shown any form of profitability in the past. Now take a look at this example. If you have to go skydiving, which is partly dangerous activity, you would want to go with a supervisor who has landed safely multiple times. You wouldn't want a new person who has never gone skydiving to put the equipment together for you. This is the same in trading. In short, trading has no guarantee that you will be making money, and all traders are only as good as their past performances. So it is better to go into trading with a solid system that has shown a form of profitability. Just like the current system which I'm trading on the USD/JPY pair, which has shown tremendous profitability over some time. This strategy has a higher chance of making me money this year than actually losing me money, which is also not impossible. Now, after having a profitable trading strategy, then and only then do you have the right to complain about trading psychology. Now, the next step is to put your risk management in place, as even if you have the most profitable trading system in the world, if your risk management is off, you stand the chance of losing your account on one reckless trade. You need a position size calculator. I believe there are some for the MT4 and MT5 platforms. For now, I don't know of TradingView, but you can use online sites for the calculation of lot sizes for any trading asset. If you find it difficult to execute your trading edge, there are a few solutions to these. Now, the first one is to give yourself more time to get better at the craft. As in any profession, you never start great. But with more time and dedication, your trading psychology will get better. Another way to go about it is to use trading bots, which will directly execute your picture-perfect strategy without any mistakes. These bots can be run on virtual private servers to ensure that your strategy is always online and that you'll not miss out on any trades when your laptop or computer is off. If you need more information on this, you can also leave a comment and I'll make a video on the topic. Now, if you've done both steps, you'll see that your trading will begin to improve, not financial advice. This would be the way I would have loved to get started if I were to get started all over again with trading. We have come to the end of the video for now. If you have watched to this level of the video, go ahead and smash the subscribe button for more educational videos like this, and I'll be seeing you in the next video. Stay profitable and blessed.